From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 4th, 2016. Happy New Year, and I hope you had a great long holiday weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the currency pairs, the U.S. currency pairs, in anticipation of this week's trading, especially the fact that there are many traders coming back after long holiday breaks and may not be familiar with what the current market has been doing over the past couple of weeks. Starting here on the USDCHF, the US dollar versus the Swiss Franc, we can see that the market has been, over the past couple of weeks, just been bouncing around inside of a range. I have that range highlighted with a black box on the chart. The green shaded area at the bottom, just into the low 9800s, that's our support. The blue shaded area in the middle, somewhat of a period of congestion, maybe a hinge point, if you will, within the range, where above the blue zone it went to the pink zone, below the blue zone went to the green zone, and we're above that today. And then the pink zone being the high that we've seen within that range, up there towards the 1.0 or parity level into the pink shaded area at the top of the range. Of course, long term, what we're looking for is a breakout of this box. It either breaks to the top side and continues the upside momentum that began late last week. We see it break above parity, and we start to look for a turn maybe as high as the last resistance highs that we see up here into the 1.0300s. That becomes our next potential target, back to the highest highs. If it can't break through that parity level and we don't see enough momentum build back to the top side, breaking through there, a failure of that high sees the potential challenge back to the bottom of our range, the bottom of the black box, and then to the green shaded area down towards the 98s. And then, of course, at any point we see a break underneath there, we look for the turn in the downtrend direction here for the US franc. So I think the biggest thing we need to be watchful for over the next couple of days is a breakout of our range. To the top side, let's look for some more upside here for this currency pair, potentially even challenging the highest high into the 0.300s. To the downside, if it breaks through 9800, through the 100 period moving average, I don't think it'd be too difficult to see this back at least into the 95s, if not the 9400s, for the US franc over the next couple of weeks. Moving on over to the EURUSD, the euro versus the US dollar, a very similar situation. The past several weeks have been stuck inside of a range, the black box that you see here on the chart. Let me zoom in one more time to give us a better viewpoint of that. You can see that black box resistance at the blue shaded area into the 1.0900s towards the 1.1 level, the blue shaded area at the top. That happens to be also the 100 period exponential moving average that we see coming into the top, showing us resistance within that range. And of course, Fibonacci high to low, the previous trend range highlighted by the blue trend line, puts the 50% right at 1.1, which is right there at the top of the blue zone. So again, there was much resistance expected over the past couple of weeks, and we can see bears coming off of there, sellers coming off of there, and tackling back down to the bottom of our range. The green shaded area, green zone, even today being challenged today into the 1.0830 level is the green shaded area, down to 1.0800. Again, just like the franc, at some point, if we see the breakout underneath our range, the black box, and underneath the 0.800 level, we'll likely look for the challenge of the last lows that we see down here into the 0.600 and 0.500s. On the upside, if it continues to pressure higher, and if at any point in time we break through that 1.1 level, the blue shaded area in the top of the range, the exponential moving average, the 50% retracement level of the previous down leg, then we look for the reversal and we look for it to continue to go up. For the time being, we're kind of stuck inside this range and inside the black box. I will take note of this. Let's zoom in one more time. Look at the green zone. We've seen pretty steady support along that green zone, but we do have a little bit of a downward slope to this price action that we see here. So with a downward slope to the price action and fairly horizontal slope to the support lows, we might be looking at the market pointing in the direction that it could be looking for the breakout. A breakout under the green zone in the direction of that downward sloping triangle. We could be looking for the new low to be made here for this currency pair. All of that, of course, would change on a breakout of the top side for the euro dollar. Moving on to the GBPUSD, Great British Pound versus the US dollar. Long term, obviously, this pair has been in a downtrend. As we see the long-term channel, it's been making new lows for the past several weeks. We can see even today challenging and making a new low. So that's the direction we want to tend to focus our efforts on. Zoom in a couple of times, we can see the market rallying a little bit off of the lows here into the 4,700 level today and rallying off of that. We have resistance here at the purple shaded area. 1.4800 is that purple shaded area right here. We can see 4,800 holding as our current intraday resistance. We see 4,700 holding as our current support. So clearly, at least at this point, we're looking for a breakout. If we're looking for reversal for this pair, for it to go back up, of course, it would need to break above the purple shaded area. If we're looking for continuation lower, it would need to break below the blue shaded area. So that's what we're going to look for today. In the direction of the trend, of course, we would be looking for selling opportunities on rallies to resistance. That, at least today, is closer as possible to 4,800 or a break underneath 4,700. Reversal to go back up, buying this currency pair, at least at this point, no real evidence of that, no indication that we're going to see reversal other than the current candle is a little bit blue. There's no real evidence that that trend is changing, no higher highs and higher lows. So I would suspect that today we're still focused on the downside, selling resistance, which is closer to 4,800, or the break underneath 4,700 for the pound dollar today. Moving on to the USDCAD, the US dollar versus Canadian dollar. Again, this currency pair kind of stuck in a range for the past couple of weeks. We can see the orange shaded area into the low 1.3800s, the green zone into the low 1.3900s. So we're about a 100 pip zone highlighted in the black box right there. As we would look to trade in the direction of the long-term trend, that would be buying. And of course, the red box down here in the middle of the trend shows us what we're looking for. We're looking for the market to bounce around inside the range, eventually break to the top side, and continue the trend movement. So for the day today, again, it's buying support or breaks of resistance within the range. We either buy it down here towards the orange zone, which you probably already missed for the day today. The next opportunity to buy this would be a breakout above the green zone. I don't want to buy it until it does that, because obviously over the past couple of weeks we have found resistance there. So it doesn't make much sense to buy it right now as it challenges that resistance, because there's a great deal of resistance there. So 39.15, 39.70 is our resistance zone. Don't buy it right now. Wait for it to break above here, and then you can look to buy it into the 1.4 thousands. On the downside, if you're looking for reversal and for this trend to change, which I don't see any evidence of that yet, the green zone does become and presents an opportunity for short opportunities for the day today. Take it back down to the orange zone as your first target. Again, underneath the orange zone, we would look for some reversal. Probably first off back down here to the pink zone where the red trend line is, where we see an overlap of Fibonacci into that level as well. So if you're trading the trend, you're buying support, the orange zone, break above the green zone for the USCAD. Moving on over to the US yen. This one's had the most significant movement, I think, really since market open. But let's start out all the way out here on the weekly time frame. I think this is important for us to recognize as we go through our week this week. Take a look at the black line that I have here on the weekly time frame. The black line represents somewhat of a rising low pattern to this currency pair, even on falls, significant dips that it's taken down into this black trend line. You see a fall here, a bounce, 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 and now here we are again into that black trend line. I think that's going to be significant over the next several days. If we can see it break through there, which it hasn't done for quite a long time. We're going all the way back to 2014 now, looking at that black line. Since 2014, it's been on that rise pattern that you see right there. Clearly a break underneath there, we'd look for it to go lower, but staying above there, watching for support and potential for it to turn around and go back up. That's been the pattern since 2014. Take it on down to the daily time frame. You can see where that black line sits in the current market, settling down here right into the mid to upper 118. So again, nothing really surprising. We've had that line there for a couple of weeks now. We've had the green shaded area there a couple of weeks. Last week we saw the market just kind of stagnant inside the yellow zone, broke underneath it. Now we're back down to the green zone. In fact, last week I said it wouldn't be too difficult for us to see it down here towards the green shaded area in the mid to upper 118. So here we are. The last time the market was here, challenged it, couldn't break through this green zone in the mid 118s and turn around and went back up. So this is the spot to watch. I definitely would not sell it right now. This does not become an attractive area to sell it. If you're going to sell it, it needs to go back up to resistance first. Buy low, sell high. Remember that? So if you're going to sell it, let it go back up challenge resistance, and then start going back down. Don't sell it into the support level. Only if it breaks underneath that support would you look for it to go lower again. At least at this point, we'll list this little purple shaded area out. Let me see if I can pull that over a little bit to be closer to the market. Let's pull this over. This will be our next support. That is into the mid 117s. So again, that's quite a long ways down. Gives you plenty of room to wait for it to actually break through the mid 118s before going lower. Zoom it on in a little bit here. So again today, sitting above 118.50, 118.80. No reason to go short right now, only if it rallies back into resistance or breaks through there. Otherwise, watching for support and reversal from this green shaded area is a possibility for the US yen today. Next, moving on over to the AUDUSD, the Australian versus the US dollar. We've been studying this downtrend on the weekly time frame for several days, actually several weeks now. The downtrend, the red triangle pattern. You see the two red trend lines down at the bottom right-hand side of the chart. That's the triangle pattern we've been studying for several weeks in the live trade room. Zoom it on down to the daily time frame. The market continues to do exactly what you would expect it to do. We see the two blue trend lines on the left rise and fall. Then the green trend lines rise and then fall. Blue trend line rise, and now we're in the fall phase again here for this currency pair. So if you're going to sell within a falling pattern, within the triangle pattern, of course, the best opportunity last week would have been to sell it back at the top of the triangle, 7,300. If you didn't do that, then obviously you've missed out on that opportunity. The next opportunity would be any rally back to the yellow shaded area on any resistance. You don't want to sell it again into support. Just doesn't make logical, technical sense to sell into support. However, as it reaches down here, if we find evidence and clues of support, we could be looking for this to go back up. Might even be a little bit lower as we look for it to challenge back here towards the blue zone and the bottom of the triangle pattern. So again, we're still consolidating, we're contracting, nothing really telling us that the pattern has changed here yet for the Australian dollar. It wouldn't surprise me to see it as deep as the the blue shaded area down towards the mid to upper, mid to low, I should say, 7100s down here towards the blue shaded area. We see the rising part of the triangle pattern. We know how far away it is. Let's take Fibonacci. I'm going to take the older fib off. So no fibs on here right now. Let's take Fibonacci from the last low, bottom of this little short blue trend line, to the current resistance high, our last resistance high. We see the 50%, 72.11, a little bit underneath there, 618 at 71.83 it looks like. The numbers are underneath that black line, but just into the orange shaded area, 786 and 886, 71.45 and 71.22 down here in between the blue and the orange shaded area. So there's still some downside expected here for this pair if it's going to reach the bottom of our triangle pattern. Sell resistance, the yellow zone, or break under the orange shaded area would be the main focus if you're looking to go short. I don't think right now is a great time to go short here yet for the Australian dollar. Moving on to the NZD, similar situation, long-term trend line. We've been studying that in the daily trade room for the past several weeks. Daily time frame, take a look. We saw the resistance high over here where the green shaded area and the red circle is, top of the blue trend line, resistance high and a fall. We came up, challenged that resistance high last week, and now we're in the fall phase once again. So this could be our double top scenario that we're looking at here from the green shaded area. If that's the case, we could be looking for a return of the downward slide, possibly even back down here towards the 6500s, watching for clues and evidence of resistance, which we already have, and potential clues to reversal, lower highs, lower lows. The green trend line kind of will be an indication for us that we're looking at a change of the trend pattern. Selling resistance, which at this point for me would be back to the blue shaded area, or break underneath support, breaking underneath the pink zone, which is 67.40 or so right now, will be the opportunities to go short. Buying this currency pair, you could buy it, but be very cautious since you're into a multi-month resistance high here into the long-term red trend line as well, the down trend line from the weekly time frame. Fundamentally, it makes sense for this currency pair to be going down, so we'll be watching for opportunities for reversal from resistance or breaks underneath support for the New Zealand dollar over the next coming weeks.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.